Good evening, everyone. Last session, that is yesterday, we had done debt equity ratio. If we have any problem in the debt equity, please know. All right. The next thing in our session. Okay. The next thing that we have to do in our session is we have done what is the meaning of profit. We have done what is the meaning of now profit consists of dividend, retained earnings, and corporate tax. Dividend, retained earnings, and corporate tax. Now, what do I mean by dividend? Dividend is that amount of profit. Am I audible now? Now, dividend is that amount of profit that is shared by the company with its shareholders. That is amount of profit is given to shareholders. Am I audible now? Still breaking? Is my voice clear now? Dividend is that amount of profit that is shared with its shareholders. Is the voice heard now? Dividend is that amount of profit which is distributed among the shareholders. Okay, great. So dividend is given by the company to its shareholders. That amount of profit which is given to the shareholders. Great. So profit consists of retained earnings and corporate tax. So whatever profit the company earns, the first thing given is the tax to the government. That is known as corporate tax. So now profit minus corporate tax is left with the company. Out of that, Some part is given to the shareholders, which is known as dividend, and some part the company keeps with itself, which is known as retained earnings. So these three things is what I wanted to tell you. The next is EPS, earning per share. Earning per share is net profit divided by the total outstanding shares. Okay, so now earning per share is the total profit earned by the share by the company divided by number of shares which have been issued to the public. That is earning per share. The next one is price earning ratio. Price earning ratio is whatever is the company's current price in the market. That is stock market divided by EPS, which is earning per share. Now, what do I mean by company's current share price? Company's current share price is whatever the company is, the stock market is showing at its price, as its price. That is current share price of the market. And earning per share is already what we have discussed. That is the number of shares which have been issued by the company. Jaspreet ji, you will come to know of the outstanding shares from the company's balance sheet. That will show the company's shares which have been issued. Yes, the last traded price is the current share price of the company. Now, there is no ideal earning per share. There is no ideal price earning ratio. Right. Now, ideal debt equity ratio, we know. We know what is earning per share now. We know what is price earning ratio. Now, the next thing that has been given in the slide is high price earning ratio means that the company's stock is overvalued. Now, how do we come to know that the price earning ratio is high when there is no ideal price earning ratio? We come to know about that by comparing it with the competitors in the same industry. So I will have to check the price earning ratio of its competitors, of that company's competitors. And if it is high, then I come to know that yes, this company's share is overvalued. Yes, industry price earning ratio. Now, one more way price earning ratio can be overvalued. How? If the investors, that is the shareholders, are expecting high growth rates. If there is any other, well, yesterday we discussed about the same company, Purnimaji, and I told you that even its debt equity ratio was very high. So I don't know how its price was really appreciating, because all its parameters are not meeting the standards. So I will not name the company, but yes, Purnimaji, you are absolutely, oh, you missed the class yesterday. I'm sorry. I didn't know about it. So this company that you are talking about, Purnimaji, all its parameters were not meeting the mark, and yet the company was doing well. That was because I think the market had hyped it. Now, I would request all of us to go through whatever we have done till now, and then I have prepared some ratios for you. I want you to calculate it. I want you to analyze it. I am opening that slide for you. Just give me some time, and then you can analyze that slide, and let's see how you analyze it, and then we can discuss that thing. Here, I have taken out these figures for you. Please find out the debt equity ratio and tell me, out of these 4 companies, according to you, don't see its name. I know with its name, you'll be able to tell me which company without calculations, but also tell me, what will you analyze seeing its figures? I give you around 10 minutes and then we will discuss this. Mr. Parag, I don't think so you need these fundamental analysis classes because you've already done it in your academics. But yes, you are most welcome. You can also, wherever we can discuss these things together. These figures, take it down, take a screenshot as and how you like it, and then please analyze these figures that have been shown. These are actual figures which I have taken. Same here, Paragji. Yesterday somebody told me to repeat it in Hindi. Are you there in the class session today so that I can speak in Hindi as well? जितेंद्र जी, मैंने आपको डेट इक्विटी ये सब कल बताया था. आई होप आप कल आप सेशन में थे, तो आपको पता होगा कि डेट इक्विटी होना चाहिए, मतलब डेट इक्विटी का डबल होना चाहिए मैक्सिमम. तो मैंने आपके लिए ये 3-4 कंपनीज के ये 3-4 कंपनीज के फिगर्स निकाले हैं. मैं चाहती हूं आप डेट इक्विटी रेशियो कैलकुलेट करें, अपने आप इसको एनालाइज करें और फिर मुझे बताएं कि आपको कहां प्रॉब्लम हो रही है. और अगर कल के मैंने सिर्फ इंग्लिश में लिया था, किसी और को कोई प्रॉब्लम है तो प्लीज बताएं, मैं उसको रिपीट कर सकती हूँ. प्लीज ये मत सोचिएगा कि ऑडियो इज नॉट देयर बिकॉज आई एम क्वाइट. I won't speak anything so that you can analyze it at peace. But the audio is very much there. जितेंद्र जी, इसलिए कि मैं चुप रह रही हूं ताकि आप एनालाइज कर सके. Would request, please write your analyzation in the chat box here so that I can read it. And also write, according to you, which company would you invest in just seeing these ratios? Although next we will also talk about what else is to be seen for us to decide on a company. All right. वानश्री जी, आई थिंक कल हमने किया था कि हाई डेट इक्विटी रेशियो भी खराब है और लो डेट इक्विटी रेशियो भी खराब है, तो अंबिका का डेट इक्विटी रेशियो तो 0 है। इसका मतलब कंपनी ने कोई डेट नहीं लिया है, और अगर कोई डेट नहीं लिया है तो कंपनी हाई टैक्सेस पे कर रही होगी। कंपनी चाहे तो डेट लेकर अपने टैक्सेस भी बचा सकती है। Vanishri ji, what do you want me to repeat? मैंने कल आपको ये बताया था कि डेट इक्विटी रेशियो आइडियल 2:1 होता है, पर अगर आप अंबिका बोल रहे हैं तो अंबिका का डेट इक्विटी रेशियो 0 है। क्यों? क्योंकि उनका डेट ही 0 है। तो मैंने आपको कल ये भी डिस्कस किया था कि हाई डेट इक्विटी रेशियो जो अभी जिस कंपनी का डाउनफॉल आया, अडानी, उनका भी हाई डेट इक्विटी रेशियो था, वो भी अच्छा नहीं है एज इन्वेस्टर्स हमारे लिए। और लो डेट इक्विटी रेशियो मतलब सारे का सारा शेयर होल्डर्स का पैसा ही लगा हुआ है, टैक्सेस हम बचा नहीं रहे हैं बाय इंट्रोड्यूसिंग मोर डेट इन द बिजनेस, तो वो भी किसी कंपनी के लिए अच्छा नहीं है। दैट्स राइट। तो टीसीएस का भी अगर आप देखें डेट इक्विटी रेशियो काफी कम है। लॉन्ग टर्म डेट अपॉन इक्विटी होता है तो 7818 डिवाइडेड बाय 366 प्लस 88733, ये हो गया उनका डेट इक्विटी रेशियो। ये भी बहुत कम है, लेकिन क्योंकि टीसीएस एक बड़ी कंपनी है, टीसीएस इतना डेट बचा के रखती है ताकि उनको कभी इमरजेंसी में डेट चाहिए तो वो फटाफट डेट ले सकते हैं। जी और अंबिका, इन दोनों का डेट बहुत कम है, इनको अपना डेट कंपोनेंट बढ़ा सकते हैं ये आराम से। नहीं, जी का 6.99 कैसे होगा पूर्णिमा जी? Yes, Purnima ji, for Aptus you are correct. Ambika, you are correct. But please check Z. You've written 6.99. I think there is a typing error. Two numbers, Anjan ji, are because I have given equity and the other is reserves and surplus. So that is why. And we have done yesterday, equity is equal to share capital plus reserves and surplus. So now, will we decide only on the basis of debt equity ratio? No. We will also see the current price, we will see EPS, then we'll have to compare the PE ratio with the other competitors and then decide. But seeing the name, yes, TCS is good. If with these figures, even Ambika is good, but they are not wisely utilizing their money. Aptus is good, provided we see their other aspects. Only on these aspects, yes, your analyzation is correct. I think you have understood this part of the fundamental analysis. Now, please say market capital. What do I mean by no? Before we move on, Please see at the bottom of this slide, there is equity. We had done this yesterday also. Somebody asked me right now, why are there two figures given? Capital plus reserves and surplus is equity. Now, please read this slide. Market capitalization. What is outstanding shares? We have just said which the shares which have been issued by the company. Now, all the shares that a company has is known as authorized share. That is the maximum amount of shares that a company can issue in its lifetime. Out of those authorized shares, the company keeps on these shares, issuing these shares to the public. The amount of shares issued by a company to the public, maybe to the vendors, maybe to some other people, debenture holders, anywhere where the company has issued shares, those number of shares are known as outstanding shares. And those outstanding shares into current share price is known as market capitalization. Current share price, that is the share price prevalent in the market. Is this clear? Any problem in? Great. If you already know, it has already told you about market capitalization and market capital, what this much. After seeing that value, if it falls under the category, then we can list the company. Otherwise, it is considered as a small company and is not listed in the stock market. Perfect. Then we move here. Please see this. If the market capital is greater than the equity of the company, that is, if I multiply the number of outstanding shares with its current market price, and if that is greater than the share capital plus reserves and surplus, that means it's a very good company and you can think about investing in this company. Now, if this part is clear, I would request all of you to please write it in the chat box so that I can move to the next topic, which is your necessary for you to analyze, which is known as cash flow statement. Okay, if that is fine with all of you, then we move ahead and do cash flow statement. Now, as the name suggests, what is cash flow statement? Now, cash flow statement means the amount of cash that is inflowing and outflowing in the business. What do I mean by What do I mean by cash flow statement? The amount of cash which is inflowing means coming into the business, and the amount of cash going out of the business, that is known as outflow of cash. Which comes in the business, जो cash अंदर आ रहा है उसको बोलते हैं inflow of cash, जो cash बाहर जा रहा है जहां हम payments कर रहे हैं उसको बोलते हैं outflow of cash. तो inflow और outflow को मिलाकर क्या बनता है? cash flow statement. कैश फ्लो स्टेटमेंट को कंपनीज दो तरीके से कैलकुलेट करती हैं, डायरेक्ट मेथड एंड इनडायरेक्ट मेथड. So there are two methods to calculate cash flow statement. One is the direct method, the other is the indirect method. There are three segments of cash flow statement. Three segments means it is divided into three parts. First part is cash flow from operating activity. Second is cash flow from investing activity. Third is cash flow from financing activity. These three activities are there in both the methods. But when we have to analyze from the point of view of investment, all the companies prepare the indirect method of cash flow statement. Now, so do we understand what is inflow of cash, what is outflow of cash? Please remember, whatever we do, whether we calculate ratios, whether we calculate cash flow statement, it is always done for a period of one accounting year. And yesterday we had done one accounting year is a period of 12 months starting from 1st April and ending on 31st March. So if we read this slide, it says it analyzes the inflow and outflow of cash in the company in one accounting year. More cash in the company would tell us that this company has liquidity. Liquidity means it has the money for its day-to-day running of the business. So more cash in the company, it tells us about the financial health, which is if the cash is high, if it is more of inflow, it tells us that the company is good. It tells us about the well-being of a company. मतलब अगर cash ज्यादा अंदर आ रहा है और कम बाहर जा रहा है, हमारे पास cash in hand है, वो हमारी company के लिए अच्छा है. If this is clear, then we move on to the next part, which is the first part. Please remember that when you are analyzing any company and you're not preparing the cash flow statement, the cash flow statements which have been provided in the sites, they are always the indirect method of cash flow statements. And I'm going to do the indirect method only in detail because we don't have to prepare the cash flow statement. We just have to analyze it. Okay. Now, the first part, as I told you, the cash flow statement is divided into three parts. The first part is cash flow from operating activity. When I say operating activity, that is from my business activity. That is the meaning of operating activity. Operating means the business that I am doing, whether there is more inflow or more outflow of cash. According to you, without understanding, without even thinking, what do you think will be good? Cash flow from operating activity, should it be negative or should it be positive? मतलब inflow ज्यादा होना चाहिए कि outflow ज्यादा होना चाहिए? Would request you to please tell me your answers and then we will go ahead and understand the total cash flow statement. Yes, Shri Kumar ji, I got your answer. Others, I'm waiting. Correct, correct. Yes. So, itna to humko pata hai, we know about this, that what may the inflow of cash, that means the cash that we receive from our business activity should be more than the cash paying to the business activity. Okay. Now, the first thing, as I said, cash flow statement is divided into three. The first thing is cash flow from operating activity. We start the cash flow statement from cash flow from operating activity. That is whether we are receiving more cash than paying cash due to our business activities. So the first thing we write is net profit because we are calculating it from the indirect method. The first thing in the indirect method is net profit. Now, when we calculate net profit, we also write some expenses which are non-cash in nature. मतलब वो उसको हम एक्सपेंस तो कंसिडर करते हैं, पर उसके लिए कैश कहीं भी नहीं जाता है, ना बाहर जा रहा है, ना हमको पेमेंट करनी होती है, लेकिन उन एक्सपेंसेस को हम एक्सपेंस कंसिडर करके अपना प्रॉफिट कम करके दिखाते हैं। तो इसका मतलब हमारा प्रॉफिट कम होता है पर आपका एक्चुअल कैश ज्यादा है, इसीलिए हम उनको जब हम कैश पोजीशन निकालना चाहते हैं तो हम वो एक्सपेंसेस को ऐड बैक करते हैं। ऐसा एक एक्सपेंस जो मैं सोच सकती हूं विच इज नॉन कैश इन नेचर इज डेप्रिसिएशन। नाउ व्हाट इज डेप्रिसिएशन? अगर मैं आपको एक एग्जांपल दूं, तो सपोजिंग मैंने आज अपना एक नया फोन खरीदा है, ठीक है, फोन की जो भी कॉस्ट है 30,000 40,000 वॉट एवर इज द कॉस्ट, I take that cost as the cost price. But if I want to sell it even 10 days after I have bought it, will I be able to sell it at the price I have bought? I know all of you will say no. That's because I have used it. We feel it has become second hand. Somebody else has used it, even if it is for a week, but somebody has used it, so its price goes down. Same thing for a car. I buy a car today, I want to sell it back tomorrow. Yet there will be a little price which has gone down. That is because you have used it. That is because it has become second hand. That is because there is wear and tear in that asset. Now, but because its price has gone down, it's a loss for me. But do I have to give cash somewhere? No, I don't give cash anywhere for depreciation, but I do write it as an expense. So my profits have gone down, but my cash has not gone down. So for calculating cash from my profit, I will add back all the non-cash expenses. I'll wait. If this is clear, then I'll move on to non-operating activities. What do I mean by non-operating activities? That is also added back because we are finding out cash flow from operating activity. If this is clear, I would request if you can please write it in the chat box. Thank you so much, Purnimaji. I hope you are understanding it well. Okay. Now, non-operating activities are cash is increasing or maybe cash is decreasing, but it is not because of this activity. It is not because of your business expense. Let me give you an example. In the business, I have sold, say, furniture. If I sell my office furniture, then add on it. If there's a loss, I will write it in the P. I will decrease the me. If I had bought something for 200 rupees and now I'm selling it for 150 rupees, so I'm having a loss of 50 rupees, but for that 50 going out anywhere? No, but I do write it to decrease my net profit, but my actual cash is more than that. So adjusting my net profit to get my actual cash, which is we add to the net profits. Right. The next changes that we do is we add or deduct changes in working capital. What is working capital? Current assets minus current liability is working capital. So when I say I will adjust it on the basis of working capital, it is I will adjust current assets and current liabilities. So what do? Decrease in current assets is added. Increase in current liability is also added. We will discuss how. I'm just telling you what is done. Decrease in current asset is added. Increase in current liability is also added. And vice versa, that is increase in current asset, decrease in current liability would be deducted. So that means for an increase in current asset and decrease in current liability, the cash is decreasing. And for a decrease in current asset, increase in current liability, the total amount of cash is more. Now let's see, current asset is debtors. What do I mean by debtors? People who owe money to the business. If my debtors are going down, that means these debtors are paying me cash. If they're paying me cash, there is more cash in the business than the profit. And therefore, I add it. Whereas, if I think about it from the creditor's point of view, creditors are people to whom the business owes money. If the creditors are decreasing, that means we are paying money to the creditors. That means there is outflow of cash. So that is what is referred to as changes in working capital. This is the beginning of cash flow from operating activity. We will be doing it more in detail. Purnima ji, only if I consider my phone as a current asset. I have been using my phone for more than 1 year, so my phone is not a current asset. But yes, if we change our phone for within 1 year, then it's a current asset. Okay, is this fine? Is the beginning of cash flow from operating activity fine? If we have understood it, we will continue with this session, I think on Monday. Once we have understood the cash flow statement, right. So if I have bought my machinery or I have bought my phone, say for 50,000, but if I'm able to sell it today only for 30,000, is it possible? Is it there that this 20,000 I'm going and giving out cash somewhere? No. So for depreciation, there is no loss of cash. So why do I consider depreciation as a cash expense? It's a non-cash expense. Same thing we can say for advertisement suspense account, which is a deferred revenue expenditure. Now, what do I mean by deferred revenue expenditure? If there, so you see these advertisements these days, they have these bigger stars like Virat Kohli and Anushka Sharma's advertisement. They must have taken a lump sum amount of money. So what does the company do? It gives that money at one go, right? But if they show it as an expense in 1 year, immediately, what will happen? Immediately their profits will fall down drastically. So instead of the advertisement giving them benefit, the advertisement is giving them losses. Why? The customers would feel, oh, the company is not doing well, its products must not be good, they will further not buy it. So to avoid that, the company, if supposing they have spent 10 lakhs on the advertisement, they will analyze, oh, this advertisement is going to give me benefit, say for 5 years. So instead of writing 10 lakhs at one go, they will write off 2 lakhs every year. So what will happen? First year they've written 2 lakh, they show 8 lakh in the asset side as a fictitious asset. Second year again they write 2 lakh, they show 6 lakh as a fictitious asset. Again third year they write 2 lakh, they show 4 lakh as the fictitious asset. Again they write 2 lakh, they show nothing, and like that they write off the expense. But in the years in which they are writing off the expense, there's no cash that they are giving out. So again it becomes a non-cash expense. So all such expenses where cash is not going out, but we have written it as an expense, will be added back to net profit to get our actual cash in hand. Please feel free to ask. Fine. With more of such examples and more of cash flow statement, I'll see you on Monday. Thank you so much and good night, everyone. If you have questions, please do write it in here. I hope, Purnima, I could take you back to your university days. Thank you so much. Good night, everyone.